Hey, what's up, everybody? It's Omar from the Bullish Bears team. I wanted to make a very quick video talking about my three plays or short and the reason why I love short selling. Um, very, very important. I wanted to talk. Let me see if I can go find this thing. So, I find Tim Sykes entertaining, and you know, you can say what you want about him, whatever, but he did this interview with this guy, Stephen Ducks, who's supposedly his student and whatever. And this video right here, and I don't know if this is true or not, but he seemed true. But there was something about what he said that resonated with me because it's exactly what I did. So there's a part in the video where he talks about like how he made
INNL happened yesterday, this of the time.
so
90%
I saw
of the winning
that. I
percentage.
saw that looking through your trades. You said 87% winning percentage, right? So what is this one pattern that's 87% probability?
All right, so I'm gonna stop it here because he's gonna talk about three patterns that he trades. All right, which are pretty much the same patterns I trade, and I'm gonna show you those setups that I'm doing. All right, so yeah.
Of success.
Okay, there's three patterns that works 85% of the time.
Tell
Number
me.
one is first red day.
Yes.
Number two is deep buying huge panics.
Yes.
Number three, this one has to fit a lot of details and with a lot of experience of shorting spikes. Number four used to work really well, but now in this bull market doesn't work that well anymore. It's called shorting parabolics.
Yeah.
All right, so he's exactly right. All right, those are the exact setups that I trade, and I only trade them when they present themselves. So I made three trades today, and I just wanted to talk about that. So this was my watch list. You see, man, it was blood red. I mean, most of the stocks finished down, but there were some nice volatile plays. One of them here was AMD. AMD was a stock that I traded today. All right, and basically you're gonna see that pre-market this stock right yesterday because it had this huge rip. If we look at the here, let me put the 5-day 5-minute chart here. You can see that 5 days ago this stock was at like $11 and it gapped up all the way to 13. So yesterday had this mega run, right? It ran up all the way up to $13, and then it started and it closed at like $13 at like 4.35, and then it kind of started pulling back. And then Kramer from CNBC gave it a strong buy. That's when I knew that this thing was gonna tank, right? So this morning this thing started tanking, and this is the previous day's close price here, and it dipped below that. So that's considered a red day. So that goes back to what Stephen Ducks was saying, first red day, right? So this is the day, then this is theoretically a red day because it dipped below the previous day's close price. So that is a strong indication for short sellers to drive the price of the stock down. So all pre-market, well, this was yesterday, it actually went red. And then today, it opened up. So technically it's the second day, or it's really, yeah, it's basically the second red day because it it closed it closed red to green. I mean green to red, and this is what happened. So I knew that the market was going to open and it was probably going to have a bounce and then another pullback. So this is today, and I use the 2-day 1-minute chart. So this is very simple. This is why I love shorting. When you see a stock that has a certain movement like AMD or lots of stocks, what you do is you watch the stock have its moves. Now, this thing, it kind of sold off at the open. Look at this. It stopped at 1150. Why? Because 1150 is a psychological resistance point for people. Whole numbers are psychological resistance points. And it starts to make its trend upward, right? So you see these bull flags forming on the way up. Oops. Let me remove that. So you see these bull flags forming on the way up. So it pulls up, and this is the pullback. People taking profit here, and you see the red, the selling pressure here. But there's too much. There's a lot of volume, so people are gonna continue to drive the price up. Drives up here, so selling rate. This is people taking more profit. Then it gaps up one more time, and then it has this little pullback to the 9 EMA. It bounces up, And that was, at this point, this is higher day. So what I look to do is very, very simple. What I look to see is that the market, now I'm looking at, and really just, I use these indicators. I use the RSI, you know it's hot. I use the MACD, this is like confirmation, a TTM squeeze. But put all that aside. What you want to focus on more than anything else is the pattern and the volume, because you know where you're getting more buying pressure or more selling pressure. And at this point, once it was higher day, okay, you start to see it sell off and you see all the selling pressure in. And what you do is, right, if you don't want to take an immediate short because you don't know if it's going to bounce off VWAP and continue up, you see it form up. So what happened was, look, pulls back, right? It almost touches 9 EMA, and right here is the lower high. This is where you take your short entry. So all you do is you put a trend line right there. First, you put a trend line at the higher day, and you put the trend line at the lower high, and this is where you take your short position, risking high of day. That's what Stephen Dux was alluding to. All right. So I just took my short position around here. All right, and I got short about, I think it was like about 12.15. Okay, and I just rolled this bad boy down. And if you notice here, right, pulls back, right. This is considered, it gaps up, right. But look, another lower high. All right. Gaps down, backs up, look, never breaks the lower high, continues to trend all the way down, right? Just continues to sell off. Each lower high is another entry point, so that could have been another entry point for you, risking the previous lower high or the high of day if you're trying to be extra greedy, okay? Now, if you're sizing in, you could have sized in here, so you could have took your first position here, your second position here, put more shares to short. You could have took a third position here, put more shares to short, if that's what you wanted to do, all right? But you're risking the previous lower high. Very, very simple, a lot less stress along it. If you notice, all the retail traders who make a lot of money primarily short sell because they do exactly this. And what you do is just watch it just collapse, okay? And you cover, all right, into the spike. And if you noticed here, it just kept going all the way down. And look, it broke below the previous low for a second and bounced back, and you know, it just bounced back all day. And I just left my position there, and I covered right in this range here. I made a very, very nice profit. Okay, I think I took I think it was like a 3,000 share position. I did very, very well. All right. Now that was stock one. Stock two that I shorted today was CCCR. Remember when he said, what did he say? One of the other patterns he loves to do, short spikes. So I have this nightly scanner that I have here, this 2 candle gap scanner. So what I saw here, and if you notice, you had this little, if you notice right here, let me change this. You see this little flag pattern forming. So once you see this flag pattern forming, a lot of traders saw this starting to gap up. If you notice, it started earlier and it was going up this trend and it formed this little flag pattern. So you see it gaps up, forms higher day, comes back down, consolidates, and you know you're going to get that break. Now, I didn't catch it here. I actually caught this around here, about the 260 mark. This was great. So what I like to do is short spikes. So when you get a spike like this, when a stock goes parabolic like this, you're going to get a pullback. And generally, I don't know what made this move. Let's see, what was it? This commercial credit pops to highs on volume. I don't even know what made this move. It's probably some news, or maybe it was some stock room, you know, chatting it up. Some people might either saw the pattern and bought, the volume came in based on the pattern, or you know, maybe some sort of chat room pumped the stock. But I don't give a shit. What I want to do is, now obviously you have to have the shares to short. All right, that's the problem with shorting. All right, you gotta have a brokerage that allows you to have shares to short. So my recommendation is, all right, number one, center point. You know, if you can get, you can go with the brokerage of center point. They're great for locates for shorting. Number two, speed trader. If you can't go with center point, go with speed trader. Option three, interactive brokers, which is great for shorting too. And option four, which has gotten a lot better, is E-Trade. All right. So what I did was, all I did was like, all right, I'm just watching the spike. All right, I'm not chasing the stock. I'm going to short into the reversal. So let me show you how you do this. Very simple to short to short spikes. This is a beautiful thing. You want it spiking as high as possible because you know that washout is going to be beautiful. So all I did was I watched it, and I saw the selling pressure starting to come in here, okay? All right, and that theoretically, at this point, theoretically, this is a lower high, but if you want to see the confirmation, I saw it come down, it bounced off the 9 EMA, and right here, I took my short position at, I think I got, let me put my little candle. So this is the way you do it. Once you see the high of day and that trend reversal come, you put a trend line there, so you know what your high point is, right? I saw it come down, I saw it bounce off here, and right in here, this is where I saw a little volume, but it wasn't too much. It was more selling than buying. Right here is where I took my short position, which was at like I don't know. I think I got filled like 265, and then I watched it go up for a second there, but I wasn't worried because I was risking higher day. I was like, hey, if it breaks above higher day, I'm out. But if it doesn't, I stay in, and look what happened. They had a momentary candle, and this wick wasn't as strong. It's an indecision candle, and look, it just came and washed. It basically washed pretty much all day long, and you see like the volume came out of this, and I covered actually right in here, right in like I think I covered it like 240. All right, made a very nice profit on this stock too. All right, and I could have held this. I mean, what I probably should have done was held it. Held it all day. And this yellow line represents the previous day's close price. All right. More than likely, this shit is gonna wash out tomorrow. I should have held, but it's fine. I made a nice profit. The last stock that I traded was CTRX. All right. The reason why I was watching this was because remember, I love to watch stocks that move like this. Stocks that gap up like this, at some point they're gonna have a reversal. So all I did was, watch the stock. As it was, I caught CERX somewhere here, and I started, and I saw this sideways consolidation happening, and I knew based on this that it was gonna move again, and I didn't take, I don't know, because I was in AMD and I was focused on AMD at the time, but I was looking at this, and if you see, when you get sideways consolidation like this, you see this. You're going to get this, what they call flat top breakout, where you get the consolidation and then it breaks the high day, and that drove the volume up. And you see it bounced off the 20 EMA. I got the 9 and 20 EMA here. It went above VWAP, and it had that second push. And all I'm doing as a short seller is waiting for the reversal. Thinkorswim is awesome because it has this thing, high bubble, where it lets you know when the stock's reached its height. And already here, even though it hasn't happened yet, I saw the MACD curling. This is a sign, a bearish sign, that there's going to be some sort of reversal, and the reversal came here. So when I saw this and I saw this bounce and not continue on upward, all I did was, I always start by putting my trend line at the high of day. Just I like the visual for me, so all I did was put the trend line here, and then I saw that it wasn't, it was losing volume and it wasn't holding. So once I saw right here that it wasn't going to continue upward, I got in short. I got filled at I think 439, 438, and I just let this go down. Now I'm risking higher day, but look what happened. Just completely washed. It completely washed all day long, and I think around, I think I covered. I didn't stay in the whole day. I actually covered. I covered. I think it was what in the three. I think when it got below 3, I think it was like 394, 395 I covered somewhere in here, in this range. I can't remember. It was like 395 or 397. I have to go back and look. I do my trading in another account. I use this for charting and longing only. So those were my 3 plays, and altogether I made several $1,000s. So I did very, very well today. And that's what I like to do with shorting, guys. It's very, very simple. I don't know, let's look at a couple of other stocks. Let's see if there was any opportunities with volume, just to show you like anything that was moving here. What were the biggest percentage gainers? I'll show you like all right, look, SNDX. You look at SNDX, all you're doing is waiting for that, watch the move happen, and there's gonna be a wash. So you just gotta be patient and watch and just wait for the reversal. And look, a head and shoulders pattern from here. Shoulder, head, shoulder, and then here's the breakdown. But all you're really doing, right, is once you see that reversal happen, you're just looking for the lower high. Here's the high of day, right? So if you're watching this, all you do at this point is you put your trend line right on the top. You're looking to see the lower high. So theoretically, right, it's right here that it's bounced off the 20, But you can then go up and you can see right here, it bounced up, but it started selling off. So right here, this is where I would have shorted. Right here at around the $15 mark. I say, hey, look, it's breaking below 15, and you know 15 is a psychological resistance barrier, risking 34 cents. And you could have just watched this wash all the way out and probably covered somewhere in the $12 range. This is what you do. You look for stocks that are moving, and you just wait to short into the reversal. And this is remember he said he looks for bounce plays. So when a stock has a wash like this, you're gonna get a bounce. So you would have had to have been, let me put the 5-minute chart just because you can see it a lot easier. But here's the wash, and this is where it finds its new support. And once you see a stock sell off, think of it like a rubber band. So theoretically, if you have to have had watched this, obviously, but once it found its support level, you could have bought the bounce. So this is what he calls a panic sale, and you're buying the bounce, risking the support level. And that's why I love shorting, and that's why I love buying dip buying, because you have a clear support level and a clear risk management setup that makes it easier for you to trade. So if it goes against you, you can stop out quickly. All right, and that's what I wanted to talk about today, guys. Save yourself all that fucking money that these guys are gonna charge you for those DVDs. If you just watch this video and then watch the charts tomorrow, and you're gonna be like, oh shit, Omar's right. And, you know, you're gonna start seeing the setups, and it'll be a lot easier for you. All right, so that's what I wanted to talk to you guys. Hope you found this helpful. Have a good night, everyone.